Welcome back to another video of my of an update of my progress with the RobinHood app and my experience here. Um, well, first of all, my experiment is going very well. July was just a rough month overall. Clear my throat. July was a rough month overall. I was up 17% and I was up 12%. For the month, I finished out 11.6%, which is really good, considering that you're starting with nothing and you're going pretty good. You don't have a lot of options to really work with. So for July, I made a total of $54. So it wasn't too bad, wasn't too great, wasn't too bad. It was just an 11% gain. So this month, I kind of hope to do a 20% gain, kind of really just jump up there, get as close as I can to 1,000, which I might get very close to it with the picks I'm making. Right now, I'd say energy is a very good stock pick. It's very good stocks to get into. I mean, they're going down, but eventually they're going to bottom out because they're power companies. Everybody needs power. It's just going to happen, and especially in the areas where you find there are more people logging on with Teslas. The power companies are going to have a little bit more juice to fill their pockets. I mean, it's not much, but when you got a couple 100,000 people driving Teslas as opposed to 1,000, it's a significant increase. So I think they're in a slump, but down the road it's going to kick up, and holding them long term is going to be great because they pay great dividends. So you'll get more money to input into other stock picks and everything. iTech is still a great company to look at, but you should exit out of it at around $17 and just let it watch, which is what I did. I didn't exit out at 17, I exited out at 15, but I got in at like 6, so I can't complain. I wish I picked more of that stock instead of Axon. Axon was a huge disappointment, but you have to hedge your bets, and you don't want to put all your eggs in one basket. And sometimes, hey, you do get an iTech and it shoots up. I expect them to have great reviews coming on I think it's in January of 2016. That's when they're going to have great reviews. So what I was thinking about that stock is keep it on your watch list. Just keep watching, because I think it's just going to go down. It's should stop at around $9-10. If it goes a little lower, it becomes a great buy. Just keep buying it, because what's going to happen is it's going to skyrocket again, and it may actually hold its value, but then it's still got to go through another trial phase after that, and then I think 1 or 2 more phases before it hits the market. But once their eye drug hits the market, it probably will be very effective. So far I'm getting close to the 700 mark. So I got $300 to get to the $1,000 mark, which in this experiment of trying to see if someone can make money with nothing, and it seems to be working, but I'm not making a tremendous amount, but I'm making enough. I mean, this month was $54. Last month was like 70. I think the whole quarter, the last quarter was like $170, $190 made. So what that's showing me is that I'm making about a couple days work if you worked an average retail job every month. So I mean, it's not enough to start withdrawing and still growing, but it's enough to say, hey, it's worthwhile enough for you to keep plugging away at this and keep pushing forward. So my goal for the end of August is to get to $1,000. I think I can do it, but that means I have $80 of deposits, because I'm staying at $20 a week deposits into it. That means I'm going to have to generate $220 of profits off of equity, which is possible, but I'm gonna have to really dig for some stocks to see if I can get some high equity stocks. With that said, Fit is a great stock for that. I'm still invested in Fit. It's going to drop again a little bit, because as it goes up, people sell, and then people get in, and it goes up and down. When it gets down to the $44 mark, I recommend just buy a bunch of them. Then when it comes back, you'll be in great shape. Because you just bought it for $44, comes back $3 higher, you made some money. And you just keep doing that when it does the dips. And another thing I want to talk to everybody about is I am working on the website. I'm looking at all my options. I'm somewhat savvy, but I'm not really code savvy. So I'm going to try and get this website up and get a forum for everyone to talk and discuss their ideas, kind of have a collective mind thinking process so we can help each other pick better stocks. And everybody can, hey, I'm looking at this stock, I'm looking at that one, what about this one, what about that one, and talk about it. What I also wanted the forum to be is, as well as the comment section and the Facebook pages, if you got a question, post it. Post it. Hey, don't be afraid to post your loss, because that's your first step. Once you recognize that you posted a loss, you're taking the right step forward, because you have to recognize that, hey, I'm not doing this right. I have to figure out how I can do this better. And you never know who's going to pop up and figure out, hey, I've done this better. I've done exactly what you did, and here's what I did to learn and develop from it. And that could be a great learning experience. And even I learn from you guys, because it's different viewpoints. I have one viewpoint, someone else has a different viewpoint. Doesn't mean we're both wrong. One of us is wrong, one of us is right. It just means we have a different look at the same stock. And we need to put our heads together and then figure out, hey, maybe one of us is right, maybe one of us is wrong, maybe both of us are right. And also, so with that said, that's my brief touch up on my debate system. Also, with the website, of course, we'll be taking donations, because it's going to cost quite a bit of money to really get it going, get a good website going, and have complete control over it. But part of that donations will go to a different charity every month. So it's something I thought about. I'm going to donate my money. I'm trying to donate about $20 a week or $30 a week, whatever it is, and register everything and take care of it. And what that website will also do is just donate to whatever Boys and Girls Club, whatever you guys can vote on, whatever foundation you want the money to go to. Because it will go into, I have to look up this company, but it just goes in this company. You get half of it for your business, and the other half can go to a foundation of your choosing. Or we just have a donation link set through PayPal, whatever it takes. Let you guys vote on that. But that's neither here nor there. That's still a little bit of ways out as the website gets built. My next discussion is I wanted to talk about precious metals and investing in precious metals. There's a lot of conspiracies out there. A lot of people say, oh, the market's going to crash, buy precious metals. You're entitled to your own opinion, but the market's not going to crash so bad that all currencies around the world would fail and cause global calamity to where you're going to want to have physical gold and silver on hand. And there are a lot of scams out there. So I would look at an accredited holding company, someone that's been checked out by the government, the SEC, and the Trade Commission, and know that they actually have all this gold on hand and it matches clients' records and statements. But there's a lot of people out there say, hey, invest in gold. And right now people are fearful of the economy. No one knows where it's going to go. No one's going to go up. It's going to go down. Is it going to go left, right? Are we going to be stagnant? Are we going to go back? And people get scared. And when you get scared, you get greedy, because then not only do you want to protect your wealth, but you want to grow it as fast as possible. So you start looking for other avenues of investment. Now, I'm not saying you can't invest in precious metals, but make sure it's a comfortable alignment of your wealth. So if you are worth $1 million, don't put $1 million in precious metals. Put 100,000. Put 10%. That way, if you lose it, and it turns out, hey, that was a Ponzi scheme, or just an investment fraud, guess what? It's still $100,000 that you lost, but it's not $1 million that you lost. You don't have to go work at Publix or go work at McDonald's for the rest of your life trying to cover up the gaps, or continue working your job for another 20, 30 years until you die. Now you can just say, hey, I can finally relax, and I can still relax. I'll be pissed, but I got $900,000. It just means one less trip or something, or I can't do this. I can't buy that boat. That's all. So, I mean, I want people to be really careful, really do your due diligence. If it sounds too good to be true, it most likely is too good to be true. Most likely. I can't speak for everyone, because sometimes some people just want to get that extra buck, and sometimes right before retirement, you really, really want to get that. Like, you need extra $500,000 to live comfortably, and it's not going to happen in 3 years. I mean, unless if you got $1 million to invest and you get a 50% gain over 3 years, that might be doable with someone who is a very good aggressive day trader and knows how to do their job. But it's just not likely that will happen. Especially, you got to worry about people that are promising 20% gains a month. I can't promise you anything. First off, a true financial advisor, financial professional will not even come close to guarantee you. They say, this is what we anticipate. This is where we're trying to be. And you just look at their track record. Do they hit where they try to be, or do they come very close? And then you make the decision. And you check their record, you check their history. At ripoff.com, see if they're being scammed or not. See if people are being scammed or not. And there's a lot. There are a lot of frauds out there. I mean, and there are a lot of people trying to start them too, or a lot of people trying to get more capital into them so they can keep doing it. I mean, it's like, you can look at Bernie Madoff. He had one for like 30, 40 years before he finally got caught. And he gave himself up. He didn't even get caught. He gave himself up. My suggestion is just be careful. Because I know people come offering, hey, I can get you. It's like, someone may, I'm not saying, you may run across that Steve Jobs. You just may run across the next Steve Jobs. You might. But the odds are, especially, you gotta look into their history, you gotta look at the person themselves. I mean, there was an investment scam here in Florida, and the person's like, you looking right off the bat, that is not a financial advisor or an investment professional. Usually they're clean cut, no tattoos, they don't look like, they look like a college graduate, or they look in a very professional manner. I mean, but I very rarely see them with a pointy goatee that comes down, tattoos, partying a lot. It's not usually the mystique of a financial professional. They're usually very boring people in finance. That's why, if you ever go into an office, they're all black and white. Their suits are black, white shirt, maybe a dull color tie. That's the type of person that's a true financial professional, because most of them are boring. They're not this outrageous partying every night. And you just gotta be careful with picking who you handle your money. If they say, well, I can take care, I'm an accountant. Okay. Did you get your degree in accounting? Show me your degree. Look up their degree. The college will be happy to tell you. It's just like, maybe this is the best way to put it. When you're looking to find someone to invest in your money, or have someone invest your money for you, interview them just like you're interviewing someone for a job. Where did they go to school? Call where they went to school. Look at where they went to college. Call where they went to college. If they said they worked at Barclays, call Barclays and see if this person worked here. If they give you a website and say that they're representing that web, like if they're working for another financial company, call a financial company, see if they're affiliated. Things of that nature. It's just a simple call. With all this web access nowadays, there's no excuse not to do due diligence and look into someone's history or past. I mean, some of these frauds can easily be spotted once you call their bank. I mean, one guy said he had his MBA from Stanford, I think it was. All you gotta do is call up Stanford and say, did such and such get an MBA? from you guys, and they're going to tell you yes or no. They're not going to say, well, we're not going to give that information out. No. Jobs look up that all the time. You just got to look them up. So with that said, guys, be safe with picking your stocks. Be safe with trusting people who will be your financial advisor, because, there's a lot of people. There's a lot of people that say they can do stuff and they don't deliver, or their intent is not really to help you, but to help themselves. Just be careful. Do your research. Do your due diligence. I'm going to post a lot of videos today, kind of a blitzkrieg, because I've been backed up with work. My work is my hedge fund, so I'm too busy looking at clients. I'm tired. So I do apologize. I meant to get this video up Friday, then Saturday. Now it's coming up on Sunday. But I will give a couple more videos and one more of a political view video, but it's kind of a political view on finance. And I hope you guys enjoy it. Please leave feedback, like, comment. Feel free to curse me out if you want. If you got an opinion, state it. It's a free country. I don't care. Just post it down below, because help as many people as possible is my goal. Thanks, guys. Also, like the Facebook page. Website coming soon. Have a good week trading next week.